Good morning and thank you for joining us on Business Morning. I'm Chimeze Obi Iwago. We'll begin from the global oil market space as prices fell this morning, extending sharp losses overnight as the rapid spread of a new strain of the novel coronavirus in the United Kingdom prompted several countries to close their borders to British travelers and freight. U.S. West Texas Intermediate crude futures dropped 30 cents to $47.67 a barrel, while Brent crude futures fell 26 cents to $50.65 a barrel. Both benchmark contracts slid nearly 3% on Monday, partly erasing recent strong gains on the back of the rollout of COVID-19 vaccines, seen as key to easing mobility restrictions. After the UK government warned that a new variant of the virus seemed to be spreading much faster than previous kinds, India, Pakistan, Russia, Jordan and Hong Kong joined European countries in suspending travel from Britain, and Saudi Arabia, Kuwait and Oman closed their borders completely. With the US dollar rising as a safe haven currency, US dollar priced oil is less attractive for buyers holding other currencies, which added to pressure on oil prices. Analysts say the downside risks are greater than the upside until we better understand how politicians are going to react in 2021, whether they are going to lock things down again. According to them, the oil market had been overbought, with long positions outweighing short positions by around 4-1. So the sell-off was inevitable. With the US dollar rising as a safe haven currency, US dollar-priced oil is less attractive for buyers holding other currencies, which added to pressure on oil prices. In the meantime, back here, the National Assembly passed the 2021 budget yesterday, approving a total of 33.588 trillion naira. The harmonized figure is an increase of 505 billion naira. The president had earlier proposed a 3.3 trillion naira appropriation bill to the lawmakers. Both chambers are asking President Buhari to send a supplementary budget because of the increase in oil price in the international market, which is hovering around $47 to $50 per barrel.
It's the last day of legislative sitting for 2020, and both houses of the National Assembly have one major agenda before them: to pass the 2021 appropriation bill. President Buhari had submitted a 13.082 trillion naira budget to a joint session of the National Assembly on October 8, 2020. The National Assembly has jacked up the figure by 505 billion to 13.588 trillion naira.
The need to enhance the structure of the budget to allow for the reflation of the economy in order to accelerate the process of taking out the economy from its current state of recession.
It retains the key assumptions proposed by the executive in the 2021 to 2023 Medium-Term Expenditure Framework (MTEF) and Fiscal Policy Paper (FSP). The benchmark price of crude was maintained at $40 per barrel, crude oil production 1.86 million barrels per day, exchange rate of 379 naira to $1, and a GDP growth rate of 3.00%.
Thursday, 17 December.
Although the National Assembly is retaining the proposed $40 benchmark price of crude, it observes that the increase in oil price in the international market gives the country the opportunity to earn extra funds.
A major recommendation in the view of increasing the total global oil price, which is above the benchmark of $40, the executive may consider the submission of supplementary appropriation bill in the event of seeming sustainable improvement of the oil price. This will help quicken the exit of the economy from the current state of recession.
I believe that at one point in the first quarter of next year, there should be a supplementary budget as early as possible, probably by January when we return, to ensure that we capture the vaccine needs, the COVID-19 vaccine needs of all Nigerians.
While the National Assembly is looking towards a supplementary budget from the president to fund some key sectors, Some crucial sectoral appropriations include Ministry of Defense, which gets the largest appropriation, 838.559 billion. Ministry of Interior, 227.015 billion. Office of a National Security Advisor, 134.095 billion. Ministry of Education, 545.237 billion. Ministry of Health, 380.208 billion. And Ministry of Power, 6.069 billion naira. The Senate is to get the sum of 33.267 billion, while the House of Representatives will get 51.994 billion naira. But with a budget deficit of more than 5 trillion naira and an inflation rate of 14.89%, the highest recorded in 34 months since January 2018, there are indeed tough days ahead for the country. Linda Akibe, Channels Television News.
Well, that's about the 2021 budget. But still on the border reopening, well, while the announcement came as good news for many businesses, some are not happy about that. Some agricultural sector practitioners, especially large-scale farmers in the rice, maize, corn, cassava, sorghum, millet, say it is a bad omen. Let's find out why from the founder and chief executive officer of Agribusiness Services, Mr. Ibikunle Onosanya. Thank you very much, Mr. Onosanya, for joining us on the program. Good morning.
Good morning. Thank you for having me.
Now, some people are excited about the border reopening, but you are not. Why?
Not at all. Now, no, like I said at the earlier program, there's no agriculturist in this country who has understood or who knows the history of agriculture and the neglect that the agricultural sector has suffered in this country in the last half a century, would applaud or support the reopening of the borders. Now, the reason is, for once, government has taken the right step in protecting the local agricultural sector. And every country does that, you know. The United States does it, Japan does it, and all other countries, you know, Indonesia, Malaysia, and all these countries that we used to compare ourselves with. So reopening the borders at this time, for me and for many of us, is a bad omen. Now, when the borders were closed, we are not advocating that the borders remain closed, you know, forever. But farmers needed time, for once, to put their acts together, you know, get on the field with the right policies, you know, supported with the right policies, which the federal government had put in place, ensuring that we eat what we grow and grow that what we can eat and all of that. The support from the central bank, trying to build capacity of farmers, and even what some donor agencies are doing, which, I mean, for example, the International Fund for Agricultural Development. You know, there's been a lot of gains that have gradually, you know, started being recorded, you know, in the agricultural sector. Local production has increased, jobs have been created, you know, and, you know, farmers' income has increased in the rice sector, the maize sector, and a host of other sectors, which we have, you know, the capacity, you know, for in this country. But suddenly opening the borders, you know, would tend to erode all the gains we had in the past. So that's why we are worried about it. Now, a lot of Nigerians, you know, I'm one of them, we had gotten used to eating imported rice, and everything we wanted should be imported. But this is a very wrong mindset. You know, there's some arguments that, well, you know, there's some other sectors in the economy, or even in the agricultural sector, that need to import, you know, inputs like agrochemicals and the stuff and things like that. There's absolutely no input required in agriculture, you know, that we cannot produce in this country. Are we talking about organic input? Are we talking about fertilizers, pesticides, herbicides, fungicides? We have the resources in this country to produce these things. even up to mechanization. Don't we have a steel rolling mill? There's so much that we could have achieved with the border closure, you know, given the deficit that we had suffered for so long that should have been sustained. Government should not have bowed to the pressures from the businessmen who have their ships and their cargo, you know, waiting to come to this country.
Now,
the lack
Mr. Nosaya, let me come in here. Yeah. Let's look at, you talked about rice. Let's look at rice, for instance. Now, 5 years after Nigeria launched what seemed at the beginning to be an aggressive push to achieve sufficiency in local production, of which the ban on importation is one of it, and of course the ban still remains even with the border reopening. Now, this widely consumed staple has not only increased in cost, but has become increasingly out of reach for the average consumer. We are in the festive season. A lot of people can't even afford the so-called local rice. Why? So would you now say that we have self-sufficiency when it comes to food?
Now, the reason for that, why the cost of even local rice is still high, is because the cost of production is still high. There's still a lot that the government needs to do to help farmers, to support farmers. A whole lot. Now, we still need more irrigation. Farmers still need it, you know, in this country, less than 1% of the Nigerian food on irrigation. You know, whereas the global average is 20%. So we still need more irrigation. We need mechanization. We need good roads. You know, farmers need storage facilities. Now, these things are the things that will impact positively on the cost of production. And also, we also need a whole lot more in the area of capacity building, getting farmers to practice best agronomic practices. Now, my organization, you know, we've been working at that, and at building capacity of farmers, introducing improved technology. And in a short while, we've been able to move farmers, you know, average production, output of rice from things like 0.8, you know, metric tons to as much as 5 metric tons to the hectare. And recently, on one of our fields, demonstration plots, we got 10 tons to the hectare, you know, of Faro 44, which is a water-loving, a lowland growing variety. So these things that do cassava, we've been able to move from 10 metric tons to the hectare, an average of 15 metric tons per hectare in the country, so as much as 48 tons per hectare. So these things are possible, but we need time. That's what we're saying.
Now when you talk about Mr.
If we are consistent with our policy.
Yeah, Mr. Nosaya, you talk about time. How much time do you need? How much time do you think the government would have to give to farmers, to agriculturists?
This protective policy that we're talking about, in terms of the ban on importation of, you know, these alternative goods from other countries, and supporting agriculture in an aggressive manner, we would need no less than, well, we've done like 1 year, okay, for us to get our acts together. I remember, you know, the lives of people, eminent Nigerians in this country. I remember them with nostalgia, the likes of Gamaliel Onosodi, people like Christopher Kolade, and a host of other, you know, very brilliant scholars in this country that have told us, look, we need to take the developmental agenda of this country one after the other. You know, if it's power we want to fix, let's face power, let's fix it. When we want to fix agriculture, let's face it, you know, squarely and fix it. And so on and so forth. We move to roads, we move to, you know, storage and so on and so forth. But, you know, doing so much, dissipating energy and resources in different directions at the same time, you know, makes us to lose impact. So it's not too much for us to wait for 5 years to get our agriculture together in this country.
Now,
this is what I believe.
Mr. Nosaya, I have to come in there because we really don't have much time. Now, if agricultural sector practitioners like you are not in support of the border reopening, how do they want to take advantage of the AFCFTA that is supposed to take off come January 1?
Well, now Nigeria has always played the big brother in Africa. And honestly, we've just been playing that role to our own detriment. We need to put Nigeria first in many things that we're doing.
You're talking about protectionism now. You're talking about protectionism now, which, I mean, has been a problem. Remember? Protectionism. Okay, go ahead, Mr. Nosaya.
Yeah, well, look, it's a positive paradigm. It's a positive thing to do if you're doing it for the right reasons. That's my point. Now, we needed, like yesterday, to have gotten our agriculture together. Now that oil is telling us, I mean, the oil sector is failing globally. A lot of countries are looking for alternatives. You know, this is one resource, agriculture, that is with us. We have, you know, wonderful resources. We have good soils. We have good climate. We have everything that can make us the food basket of the whole world. We can feed the world. Israel, that is, you know, that is the highest importer of vegetables and stuff, agricultural exporter, I mean, you know, they're doing all of that in a desert. You know, there's so much that I think we just, I get miffed at times. So pardon my emotions here. I get miffed when I hear people saying, oh, for how long? When are we going to do it? And, you know, we need to endure pain for some time in order for us to gain in the future. We need short-term pains for long-term gain, you know? So let's commit to this, and this country will be the better for it. That's my point.
Well, Mr. Nosaya, a couple of other agricultural produce. Yes, I'm still here, if you can hear me. Yes, a couple of other agricultural produce are still under ban. Then now, going into 2021, looking at the sector where you operate, what do you see? What is the outlook? A very quick one, please.
Now I looked at the budget. Thankfully, that's been approved, and we are going to be going back into the January to December budget cycle, and that's good. That's applause. I congratulate the National Assembly and the government for doing this. But I look at agriculture. You know, the allocation to agriculture in this whole budget is just a little over 1%. And I remember the Maputo Declaration in 2003 and the African peer review mechanism, where, you know, African heads of states gathered together in the capital of Mozambique and decided that they would commit not less than 10% of their, you know, of the annual budget, you know, towards developing and supporting agriculture. How do you compare 1% to 10%? And this was done 17 years ago. This decision was taken 17 years ago. So I'm not, you know, I'm not still happy at the allocation to agriculture, you know, in the 2021 budget. We're still scratching the surface. We are not facing the real thing. This is my view. So unfortunately, you know, it's a pity. It's just a pity that, you know, certain things that are so obvious, that should be obvious, let me say, is not obvious to a lot of people, a lot of our leaders there. And I do know that I'm sure there would have been, you know, those in that sector would have, you know, cried out and said all they could, but I mean, what can they do? So I don't see too much of a good future for agriculture if we go by this budget. I know a number of interventions are already ongoing. Let those ones be sustained. Yeah, that will help the farmer, but let's not introduce policies. Now, the reopening of the border is not good for health. We're in the second wave of the COVID-19. It's not good for security. You know what's happening? Even rice farmers are being slaughtered. So, and that's going to impact negatively in rice production in the coming year, because these are people who have been trained over the years, you know, to produce. They're all gone. And,
okay, Mr. Losaya.
We need an aggressive and an angry to agricultural development in this country if we really mean business.
Thank you very much. Thank you very much for your views. And I'm sure your views, of course, will be taken somehow. And I'm sure eventually, hopefully, we'll get it right all the way. Well, we're in the Christmas mode. And I'm sure I'm not going to see you before Christmas. I wish you and your family a Merry Christmas. Enjoy the rest of the day.
Thank you very much. Thank you.
Odesola Sumoni, research analyst with Financial Derivatives Company, is live with me in the studio. Good morning, Desola. Well, I don't know. Borders are being shut against UK. Who let you into this country, for goodness sake? What are you doing here?
Came to say hello.
They shouldn't have let you because of this new strain of virus. Anyway, it's good to see you. Now, looking at what is happening in the UK, kind of a double whammy for the UK government, facing with no deal, Brexit talk, and of course we have this new strain of virus, not just in the UK, but then here in Africa, South Africa. So what's the implication of this for trade, particularly as this AfCFTA is about to take off? Thank you for that question, Chimis, and it's good to see you. And I've had 4 tests in the past 1 week, and they are negative. Interesting. So regarding trade, just Monday, yes, the president of France, Emmanuel Macron, announced that, you know, the border, there's 2 land borders, important land borders leading to the UK, border of Dover and Calais, were closed to trade. So we've seen a lot of trucks and lorries carrying fresh produce stock on either side of the border, and that border is very important. Those borders are very important because they account for around 20% of total British trade with the EU, and particularly for fresh produce. So each hour that this lorry spend on the road is money that is being lost. And top grocers in the UK, Tesco's and Sainsbury's, have said that although they have sufficient stock to last up in the run-up to Christmas, that if this closure remains, that some items may come out of stock. Now, regarding the AfCFTA, I think one of the core principles of the AfCFTA is free movement of goods and services across borders. And with the new strain of this coronavirus pandemic in South Africa and the rising cases in Lagos and the restrictions and the attendant lockdowns, I think that it may delay the implementation a little bit. They may delay the implementation of the AfCFTA. You think so? Maybe. The Secretary General was on this show, and he was, you know, it's sacrosanct that this has to take off January 1. Yes, it's happening January 1, but people are on lockdown. So still trade activities would be limited. So that's what I mean, yeah. Now, okay, still talking about this new variant of the virus, we've seen oil take a hit. So what's the outlook for the global oil markets going into 2021, even though we're seeing vaccine on the horizon? So oil has had a very volatile year. Started the year on the high, $65 per barrel. Then at the start of the coronavirus pandemic, you know, Russia and Saudi Arabia were flexing their muscle. We had some price wars. We saw oil decline to about $10 per barrel. WTI was even negative. And then with the news of the vaccine, we saw oil rise up again, reaching as high as $52 per barrel. Then we had the second strand, give oil a beating again. So I think that this new strand, I think, is going to, you know, reduce international travels and is going to delay the recovery we expect in global oil demand, which is also going to have an implication on economic recovery. So overall, I think that while the news of the vaccine is bullish, I think we have significant downside risk, and one of them, the key one, is this this new strand of coronavirus pandemic and OPEC's new limited increases in production output. Now, yeah, where does this now, with this situation, where does it leave OPEC and its production cuts? I think that first of all, when OPEC announced that they would increase production by 500,000 barrels per day starting January 1, we did not know about this second strand of the coronavirus. So I think that they are closely watching the market, and OPEC is going to adjust their production in line with the market reality. Because already the monthly oil market reports from OPEC for this month of December, it shows that OPEC has
revise downwards the oil demand for next year, and that did not even take cognizance of this new strand. So I think that OPEC is going to move in line with what is happening in the oil markets.
Now, yesterday, the National Assembly passed the 2021 budget, and we have the benchmark price at $40 per barrel and production of 1.86 million barrels per day. Should Nigeria really be worried about this trend in the global oil market?
Well, as an oil exporter, Nigeria should be worried about developments in the oil market. And this development, like I said, it has a potential to limit oil price gains, particularly because of the lockdowns across countries. If more and more countries are going on lockdown, that's going to have significant implications for global travels and as well as domestic travel, which is going to, reduce oil demand growth. So I think Nigeria should not be worried too much, because the consensus of forecast is that oil prices would not go below $40 per barrel next year. I mean, the average is about $45 per barrel. Even Goldman Sachs were very, very bullish. They forecast around $65 per barrel for next year, citing, the vaccine. But what we are seeing is also there's some form of vaccine apathy. Like, people are suspicious about, side effects of the vaccine, because they feel like the vaccine came out too quickly. So I think all those factors are going to affect oil prices that are going forward.
Yeah, still talking about the implications. Now, we've seen FAT disbursement declining, even though, marginally for now. So what next?
I'll say that one of the positives of the pandemic was that it forced states to look inward, because of these oil price shocks are now becoming more and more persistent. We had one just 2016, 2017. Now we're having one again. So it's forcing state governments to look inwards, to look at how they can generate more internally generated revenue. As a matter of fact, the World Bank loan of $1.5 billion disbursed, I think, last week or 2 weeks ago.
No, last week.
A good part of it was to improve the fiscal sustainability of the state government. So I think that following this trend, I think that state governments are going to try to, I mean, we've been talking about this diversification forever,
Absolutely.
But we'll keep talking about it until we eventually get there.
Yeah, so, talking about looking inwards and, yes, the issue of diversification. I just had a conversation on this issue of border reopening. I'm sure you were listening. I mean, Mr. Onose was very angry. He doesn't like the fact that these borders are being reopened because of the agriculture. You guys always come up with your inflation forecast. We've seen what's happening with food, inflation, and all of that. Do you think he is right to say, look, this border reopening is not good for the agricultural sector? I'll
give you our view. We believe that it is positive because, like you said, food inflation for November was 18.3%. And why? Because of... Okay, let's backtrack a little bit. So the border closure, it helped a little bit. Anecdotal evidence suggests that crop production increased, but it did not increase enough. It increased as much as it could, given everything, except, we now begin to, farm more land, change our processes, use more plants or seeds that have higher yield. That's when our production will increase more significantly. So why Mr. Onosoya was upset was because, now they're going to get less bang for their buck. Because of the floodgates have been opened now, prices are going to be depressed a little bit. Prices are going to be depressed, and it is not positive for them because now they get less money for their produce.
Because we're seeing even the so-called local rice is very expensive.
Yeah, like you said, cost of production in Nigeria we still have binding infrastructure constraints, and even if they close the border for 5 years, I still think that, except
he's asking for 5 years. Can you imagine that?
Yeah.
Okay. All right. Now, we're in festive season. Now, according to a recent report by the NBS, intra-city travel in Lagos has increased 73.8% year-on-year, while intercity travel is up 36.4% year-on-year. Now, what is the effect of this on domestic travels for Christmas and, of course, for food prices?
Let me take you back to Econ 101. So in economics, we know there's something about elasticities, which is essentially how does your demand change, how sensitive is demand to changes in price. So studies have shown that travel is price elastic, particularly traveling for leisure, and Christmas travel is literally traveling for leisure. So because of, prices have increased sharply for many reasons compared to last year, we are seeing making less people travel. Also, because of the year has not been very good economically, a lot of people lost their jobs, reduced income. So the spending power, also with inflation, currently about 15%, I think inflation has also eaten into people's real income. So there's less money to flex. So people are not traveling, one, because of higher costs, and two, there's less money to spend. Secondly, regarding with domestic commodity prices, I think that because of logistic cost of transporting goods from the north down here is higher, I think that would also keep inflation prices a little bit elevated, or it would reduce the reduction. No, what's the better word now? It would weigh on prices, even as border opening is reducing prices. I think that the cost of transportation will reduce how far prices can go. Okay,
let's look at the currency market, because that's also tied to the commodities. Now, around this time of the year, we know that the Naira rallies at around, in the parallel market due to visiting relatives and friends. However, this year, the Naira has remained relatively flat. As of yesterday, 477 to the dollar.
Yeah.
What could be responsible, for this development? Would you say is that perhaps the diaspora remittance policy just recently introduced by the central bank?
Okay, so again, a little bit of context. Before now, if I as a migrant sent money to my parents through the official means, they would be paid in Naira. But with this new policy, and the exchange rates will be determined between the IMTOs and the banks. So, but with this new diaspora remittance policy, the recipient of the money will receive it in foreign currency or in cash, either in their domiciliary account or in cash, which I think is positive for the foreign exchange market, and that is supporting the exchange rates currently at the parallel market. Because now I know that if I send my daddy £100, he's going to get £100, not the Naira equivalent at whatever exchange rate, which may not be favorable. So that is helping. Regarding the visiting friends and relatives, like you know how this year has been, people are not traveling because of travel restrictions. In fact, I have had to cut my trip short. I'm jumping on the next flight out of Nigeria tomorrow.
Before you get locked down.
Before I get locked down, yes.
All right, so what's your outlook for the Naira, looking at, some of the policies that have been put in place?
I think going forward, I expect that for Q1 2021, I think the Naira would appreciate in Q1 2021, first of all, because of, this new policy. Then we have this disbursement of this loan by the World Bank. So I think those factors will support the Naira. I think also the Naira would converge towards, the parallel market will converge towards the official market, but they would not unify. And towards the end of the year, I think also because of the weak economic fundamentals, we may see currency adjustments.
Okay. Now, while we see that appreciation in Naira, the equity is also seeing good bubble there. Santa rallies seem to be there now. So what is your outlook for that market?
So what we are seeing now is typical around this time of the year, the Santa rally. People are bargain hunting, cherry picking. But in addition to that, because of a policy introduced by the central bank late last year, there's a lot of maturing treasury bills. Around, I think for December, we have about 1.8 billion treasury bills maturing, and there's nowhere for these monies to go. So part of where they're going to is in equities market. I've seen some sectors like the telcos, construction, insurance sectors, and banking sectors increase quite sharply as a result of money moving into. But there's no fundamentals to support it. So we expect that while this rally is going on, we are expecting a correction quite shortly.
But definitely not before the end of the year, because this Santa has to remain in the market. I keep saying that, Desola. I keep saying that. Anyway, Eddie, of course, will give us the update.
Yes.
Yeah. We'll be back in a moment. Eddie, Desola says no fundamentals to support whatever rally we're seeing in the market now. I don't want to believe that. You heard me tell him that. I don't want to believe that. Anyway, what's the update on the Santa rally?
Of activity in the equities market, just like he mentioned, because there is no other option for investors at this time. The yields in the fixed income space are close to nothing, and one will wonder, why are people still putting their money there? But people are looking for better places, with better yields, and so that's why we have a lot of people in the fixed income in the equities market. But yesterday, Chimi, the market was up 1.74%. We've gotten to a new high of 37,443.40 points, with the equity cap at 19.570 trillion naira. Now, activity level was mixed yesterday, but mostly positive. We saw about 427.05 million units worth 3.30 billion naira traded in over 5,000 deals. Activity level was mixed. Now, unfortunately, you saw profit takers in the banking sector yesterday. That counter was down 1.05%. We saw losses from all the tier 1 lenders. Zenith Bank was down by about 2%. GT Bank was down by over 1%. UBA, FBNH and Access Bank were all negative. Consumer goods was down 0.14%, and that was due to the declines on International Breweries and Unilever. Industrial goods was up 4.48%. Now, Chimi, Dangote Cement was up by almost 10% yesterday. Now, there's earlier in the week, Dangote Cement released a sustainability report. Yesterday, they also announced the share buyback program, the first tranche of this share buyback program. So right now, investors are just, taking position in that stock because they know that very soon they're going to be making some money. So, Chimi, if you're into that, this is a good time to actually buy shares in Dangote Cement if you just want to cash out before the end of the year. We also saw gains from WAPCO yesterday. It was up about 2.2%. So the market yesterday was largely driven by the industrial goods sector, of course, Dangote Cement. Insurance was up 5.16%. We saw a lot of gains from the insurance companies. One of the insurance companies, Sunu Assurance, has actually announced that it has completed the first phase of its recapitalization program. So we're likely to see investors react to that positively. You know what's been going on with the recapitalization exercise and all of that. So investors will be reacting to that today. While the oil and gas sector was up 0.76%. Now, Chimi, we're most likely to see the day end positive today as well. Like I said, investors are still going to be reacting to the Dangote share buyback program. So that sector is most likely going to be positive for some time until, that exercise is done. And so, like we always say, when Dangote Cement sneezes, the market feels it. So as long as that happens, we're likely to see Dangote Cement driving market performance.
Well, you can see, Eddie, I was just listening to you talk, and you actually gave me one advice. I think I'm going to take that advice of yours. I know that a lot of investors are looking to take advantage of perhaps the dividend payout at the end of the year, aside from what we're seeing, the low yield environment in the fixed income market. And perhaps we could take a bet at this moment. Maybe before the end of the year or by the end of the year, we could reach the 40,000 mark. Hopefully. Do you think so?
Hopefully. I mean, with the way we're going, if this rally continues in the market, we're most likely going to get there. So I'm also going to be optimistic with you, and keep our fingers crossed to get to that level before the end of the year. Optimism.
That's the word. All right, Eddie. Thank you. We'll be back to you. But in the meantime, we'll take a break. When we come back, we'll talk to Juliana. Good morning, Juliana, and of course, good morning, London. Well, it's a beautiful morning despite the new strain of virus rearing its head. So tell me, Juliana, how have Londoners woken up to another day after yesterday's tumultuous events?
Oh, well, it's not been great, and it's definitely not a beautiful morning here in London. It's dark, it's cold, and it's wet. Very little festive cheer. And I've got to say, it's pretty difficult to try and gauge public opinion on this because the past couple of days have been so fast moving. This time last week, a lot of people felt as if they could finally celebrate Christmas. They'd been given these 5 days of respite by the Prime Minister. And, 4 days later, the entire country, well, London and the southeast has been shut down because of this new variant of COVID-19 that is more transmissible, up to 70% more transmissible. It's spreads more quickly. And I think now one of the main topics of concern here in this country is that it appears to spread pretty quickly in children. We're not sure whether or not it does have any of that devastating, deadly impact, but the question now remains, will children return to school in January? We already had some discussion from the Education Secretary, Gavin Williamson, about spreading out the return to school. So those who have exams coming up pretty soon in the summer will be returning quickly, but younger children will be returning much more slowly. And now we're wondering whether or not there will be a return to school in the next 3 months. Just a couple of weeks ago, we were celebrating the Pfizer-BioNTech vaccine, the inoculation of tens of thousands of Brits. But now Britain has got this, this dirty COVID variant that is causing lots of stress, especially in the run-up to Christmas, which is effectively cancelled. And even those that aren't in the Tier 4, Boris Johnson, the Prime Minister, was pretty clear in his televised address yesterday that people should act as if they have the virus. And even if you are in one of those lower tiers, you should try not to mix with any other households. And what we're expecting is, as soon as it reaches Boxing Day, the entirety of the country will be put into a pretty severe lockdown.
This is not a cheering news at all. Anyway, UK and France are expected to set out plans to restart freight, but lorry drivers in Kent have spent a second night sleeping in their vehicles waiting for the border with France to reopen. Could you update us on this? When are the politicians thrashing out this plan to restart trade and travel?
Well, yes, on Sunday, due to this breaking story that we received by the Prime Minister on Saturday afternoon, the French President Emmanuel Macron decided to close the border, including any freight coming in and out of France. It was for 48 hours, and that 48 hours is due to expire tonight at 11 o'clock. And we do know, because of what we've been hearing from ministers here in Britain, that both sides are in extensive discussions. As you said, there are scenes on the road in Kent that show thousands of lorries literally packed up bumper to bumper. You know, there's no access to toilets, no food. Some have been there for over 24 hours. Many hauliers will not be able to get home from Christmas, many of them based in Europe. And this is a major topic of concern. And I think one of the main issues now is, how do we get out of this? Because even when it does open again at 11 o'clock, this new strain is a huge issue. And what we're hearing, I think Priti Patel, the Home Secretary, was speaking this morning. She did say that what they're hoping to do is test each and every single driver. You can imagine how long that is going to take, and they just don't have the infrastructure in place at Calais and at Dover at the moment. But in his address yesterday, Prime Minister Boris Johnson did personally speak to Emmanuel Macron, asking him, urging him to open up the borders again. But like I said, even once they are open, the backlog is over 24 hours long. They still have to test each and every driver. So unfortunately, it does seem, for those who were stuck on those layaways in Kent, that they just won't be able to get home in time for Christmas.
Even parcels into and out of the UK have been caught up in the suspension of the flights and freight over fears of this new coronavirus variant. Royal Mail has suspended deliveries of packages and letters to mainland Europe, Canada and Turkey, while the German firm Deutsche Post has temporarily halted services to Britain and Ireland. This is certainly not a cheering Christmas for most people in the UK, I must say.
Yeah, another non-festive story, I'm afraid. This time it's about Royal Mail. They've released a statement saying it's just going to be completely impossible for them to guarantee any Christmas delivery. But you still have today, so any of our viewers in the UK, if you get to a post office in time, you may be able to get a package home to your loved one, but only across the UK. They have suspended any deliveries of packages to mainland Europe. And again, this is down to the border closures, they put a statement on their website. They're basically saying for special delivery guaranteed by 9 a.m, we are suspending our delivery guarantee. We can assure you that we'll be endeavouring to deliver all items as quickly as possible. Yeah, it definitely is the nightmare before and after Christmas. Yes, Christmas has effectively been cancelled for millions of people across Britain, and borders have been closed. People that were promised they could go home by the Prime Minister last week have, of course, had those plans cancelled. And it's not just affecting those who want to have, you know, a large family around for Christmas. This is obviously affecting those who are delivering goods and items. And, as you said, Royal Mail have just been the latest company to say that they will be suspending all deliveries.
All right, Juliana, we'll hope to get more updates from you later in the day. In the meantime, please stay safe.